Okay, everyone, happy Friday. It's May 4th and time for another weekly wrap. If you remember last week, I was talking about how there were a couple of key areas for the market. And very specifically, it had to do around the low of last week and the high of last week. And if we go ahead, let's place a horizontal line here on the high. Oops. And then we'll go ahead and put one here on the low. We'll zoom in and let's go down right away to an hourly bar. First of all, I don't know what's going on here. This large bar happened after the market closed for Friday, so I'm fairly certain that that's a bad tick. At any rate, here are the highs from the prior weeks. Okay. And you can see that at the start of this week, which was here on April 30th, the market pushed up here to the high. Okay? There we go. I actually had to adjust it down a little bit. So this is a little bit clearer. This is the high from the prior week, also a triple top, by the way. And you can see here that right at the beginning of the week, what did the market do? It came up and tested these high levels. So at this point, remember, with an inside bar, the high and the low of that inside bar are going to be considered support and resistance. So how then can we go from having a theory which says, hey, there might be some support and resistance, to actually getting into a trade? Let's go ahead and go down to the 15-minute bar here, and I'll zoom in. Remember, here was the triple top from the prior week, and then here was the high coming into the very next week. As the market starts to trade above this level, you can use a 3-bar reversal technique. Now, normally, 3-bar reversal technique is very good at ferreting out trades when you have a consolidation level. And they're very useful for getting you into a position in the direction of the momentum. But you have to realize something here, that there's really no way, because I know what the questions are going to be. Well, what's the percentage? Everybody wants to know how accurate a system is. Believe me, just because a system is accurate does not mean that you as an individual trader are going to make money from it. That's why I stress so much that you need to have the skills of trading first. Because it doesn't matter how good the system is. In fact, Elliott himself, the guy that created and devised and researched the whole Elliott wave theory, it took him 3 years to actually be able to trade his own system. Okay, a system that he made up. Tom DeMark, who is very popular in books and among commodities and futures trading circles, he's written, I think, 5 or 6 books on the markets, and he tells stories of himself not being able to trade the systems that he publishes. So remember, the technique that I'm going to give you, I don't think there's any way to get a hard and fast percentage on it. So please don't ask me, because I'm not going to be able to give one to you. I'm just talking about pure trading tactics here. From this standpoint, the 3-bar reversal, the theory is, okay, I'm at resistance, so I should see the market making a reaction. Well, how are you going to tell that the market is making a reaction down and it's not just giving you, some sort of fake out or some sort of head fake? Well, the 3-bar reversal is effective because it helps you to allow for volatility. Okay, you see this low here? This low is the key for this whole move above the line. And I'll show you why. As the market is pushing up, here's the first bar that closes above our prior weekly high. At this point, we're going to start counting backwards. 1, 2, 3. So after once that bar closes, remember this is a 15-minute bar here, this is the level that we're looking at for the